Ladies and gentlemen, good day, and welcome to Q2 FY21 earnings conference call of Entertainment Network India Limited. Joining us on the call today are Mr. Prashant Pandey, Managing Director and CEO, Mr. N. Subramanian, Executive Director and Group CFO, and Mr. Sufal Agarwal, Financial Controller from Entertainment Network India Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Prashant Pandey. Thank you, and over to you, sir.
Thank you, Nirav, and welcome to this conference call, dear investors. I will take 7 or 8 minutes to give you a small narrative on the company's performance in the Q2, and as always, we will open up the call after that. From the presentation, you would have seen that our revenues are down 59% compared to Q2 of last year. This by itself should not be surprising to you because you may have seen the results of several other media companies, and by and large, all media company results have been affected by the COVID on the ground, as well as by the lockdowns that followed the COVID scenario. So let me give you a little flavor of this 59% degrowth so that you get more details about understanding this particular thing. So I mentioned first about the COVID impact, and we did a little analysis, and because in radio you operate in different states, and because the spread of COVID was different in different states, let me give you a flavor about it. So generally speaking, there were certain parts of the country which became COVID hotspots. And of course, Maharashtra was at the top, with Mumbai pretty much being the hot spot for a long period of time. Subsequently, Delhi became the hotspot, and even today, Delhi is going through a third wave. And then you had Andhra Pradesh, Karnataka, Tamil Nadu, Kerala. All of those southern states have been through a bad phase in the last 2 or 3 months, and also West Bengal. And here's what we see, that if you look at these states, the revenue degrowth in these states has been particularly high. So Maharashtra, our revenues are down 55%, Delhi, they are down 67%, Andhra 60%, West Bengal 62%, Tamil Nadu 75%, Karnataka 80%, Kerala 70%. So these are clearly states where COVID spread rampantly, and revenues and lockdowns followed. Lockdowns were strictly enforced, and therefore the revenues also have taken a big beating. But there were other parts of the country where the COVID spread was much lesser, and let me give you examples of those now. Generally speaking, Gujarat went through far lesser COVID impact, and our revenue degrowth in Gujarat has been only 36%. Similarly, in Madhya Pradesh, it was 28%. In Uttar Pradesh, it was 32%. And then there are some very interesting states where actually revenues have grown compared to last year. Rajasthan, our revenues are up by 3%. Himachal, our revenues are up by 36%. Chhattisgarh, our revenues are up by 11%. Jammu and Kashmir, our revenues are up by 40%. And in Assam, our revenues are up by 75%. So clearly you will see that the 59% degrowth is not a uniform degrowth. It is very, very much attributable because of COVID. Now, because of COVID, there has been another impact that you will observe in the performances of all media companies. And I'll just talk about radio companies over here for a moment. Now, there are radio companies which are very heavily dependent upon the metros. And the metros have been badly affected by COVID. So companies like Radio 1 or Ishq FM or Hindustan Times, which are dependent to a very large extent on the top 8 markets, have seen a bigger revenue drop, typically in the region of 65 to 80%. Then there are companies like Mirchi and Radio City and Big FM and Red FM, and these are spread across the country, and their dependence on the top 8 markets is relatively lesser, definitely lesser than the previous set of radio stations I identified. And the revenue degrowth over here for these players has been in the region of 50 to 55 to 60%. And then there are some regional players like My FM, for instance, or some of the players who are in the state-specific areas, like maybe the Rajasthan Patrika Group or some of the others, who have a very low dependence on the metros, and their revenue degrowth has been typically lesser. I think my FM has announced a 42% degrowth. So this is another aspect of just the same COVID phenomenon. Now, as COVID is reducing in the country, we are finding that the business is starting to bounce back. So quarter two degrowth was lesser than quarter one. October and November is looking pretty strong now with the festive season in and now with lockdowns being lifted. So we're finding that as COVID lifts, the business will come back to where it was. I mentioned this earlier in some other interview that media companies are 1 quarter behind the real economy. Generally speaking, people believe the real economy will start stabilizing in the third quarter, which means that the radio companies, other television companies should also start stabilizing by the end of the third quarter or by the fourth quarter. And we are seeing the early signs of that in October and November already. Diwali is turning out to be good. IPL has given a lot of business to sports channels. And generally, we are finding that some of the print publications are starting to see advertising coming. So this was the first point I wanted to give you a little bit of insight into the 59% revenue drop that ENIL has reported. Let me come to the second point now. In a situation like this, you have to look at sequential growth to figure out if you're doing well or not. And if you look at our sequential growth, sequentially we are up by 30% compared to last quarter. And that too because last quarter we had a big prior period revenue in the form of international revenues, which because of which the sequential growth is lesser, but in real terms sequential growth on a like-to-like basis is far higher. Within that, radio has grown by 132%. Our digital business has grown by 67%. Our media solutions business has grown by 31%. The one business which has taken a hit in quarter two compared to quarter one is obviously the on-ground business, what we call the intellectual property business or the IP business, and that's down 58%. So I think the IP business will continue to remain down in Q3, but by Q4, I believe that the IP businesses will start to open up. We just heard that the Sunburn Festival in Goa has been given the green signal by the Goa government, which basically tells you that the markets, the IP business will start opening up in the fourth quarter. So this is another flavor of the 59%. But let me also tell you about the good news about the solutions business particularly, that our gross margins have dramatically improved. Now, you may know that this has been a focus area for the company for the last 3 years. In this quarter, our solutions business has reported a 54% gross margin number. Now, that's truly remarkable because our stable state, we believe, was in the region of 40 to 45%, but we have topped that and gone to 54%. Our digital revenues, the digital gross margin is 45%. Now, remember, most companies struggle with digital and report negative numbers. We have reported negative margins in the past as well, but we have now reported a 45% digital gross margin in the digital business. And even though our IP solution business is very, very small in this quarter, we have reported a 54% margin there as well. But then you may wonder why the EBITDA performance is so bad. And the reason for that is that the core radio business, which has high operating leverage, has suffered a big margin erosion, simply because the overheads are now being borne by on top of a smaller revenue base. So the gross margin in the radio business is just 60%, and typically this number tends to be in the 80% or odd region. So that has taken a big hit. So that was the second flavor I wanted to give you on my revenue performance. The third flavor on the revenue performance is about categories, and if some of you who may be interested, I can just quickly tell you that there are categories which are easy to understand, which are doing well. FMCG is doing well because people have to buy FMCG products and they're doing well. Education is doing well primarily because of a quarterly shift in the education season from quarter one to quarter two. Health and pharma obviously is doing well. BFI is doing well because it's again targeted mostly at the male audiences, and radio is a very strong medium for male audiences. What is down on radio is IT, or basically all the e-commerce and e-education and e-payment wallets and those kind of things, which have chosen to go on the sports channels and haven't done much on the radio medium or on the print medium. Typically, we have seen that the smaller IT companies are not advertising, and smaller IT companies used to advertise city by city or state by state, and that is the reason why print and radio both have been bereft of revenues in this quarter. But of course, all of this will come back. So this was just a bit of a category information. Auto is down, government is down, real estate is down. These are some of the sectors which are down. But as the economy lifts, I believe that these will all come back. Now, a little flavor on the revenue, on the pricing and the volume front. Overall, there was pricing pressure. The pricing is down about 30%. However, the good news is that the pricing is not down in its value. The pricing is down because we've been forced to give bonus spots to many advertisers. And to be fair, advertisers have extracted a good deal from us because of the fact that the overall demand was lesser. But I think that the bonusing is getting, it can be reversed, and the bonusing is already starting to get reversed. And I think that unlike in the earlier past when pricing took a long time to recover, I think this year the pricing will recover far faster. So that's one bit. On volumes, the volumes drop has been very, very related to the COVID phenomenon. So top 8 markets, our volumes have dropped by 51%. But in the remaining 27 growth markets, I'm talking about the legacy markets, the volume drop is just 11%. So I think there's a big message over there that when COVID lifts, the company's performance will be back on track. I also want to come to the next point after covering revenues, that in terms of cost management, I think the company has done a fantastic job. Our overall costs are down 35% in the quarter. And there are very tough action that the company has taken on almost all areas. So, for instance, our DVC business, which is related to events, obviously the costs are down by 63% because the revenues also are down. But look at HR. Our HR cost is down 38%. Electricity, because we have reduced power of transmission stations and our offices, electricity is down 20%. Admin costs, which include travel, is down 59%. Our provision for doubtful debt is down 57%. Our professional fees is down 42%. Marketing is down 66%. But I want to draw your attention to a couple of sticky costs which we are finding difficult to reduce. One is the license fee, which we pay to the government of India, which is down only 7%. And the reason for that is that the government's license fee has a flooring limit. And we cannot go below the floor limit. And that's the reason why the drop is very limited. There's rent, which is down only 4%, but we will see an improvement in the coming quarters. But again, the improvements will be limited in scale. And then there are other expenses like production costs, which include basically all India radio towers and the monitoring fees that we pay to Bessel and all of those things. Those, again, the government has been very unrelenting. And basically, those are costs where we have not been able to reduce costs dramatically, but they remain challenges for the future. I also want to tell you about one last thing before I open it up, and which is that the company has been following consistently a strategy of transforming from being a radio company to being a much bigger content company, from being an FM company to being a multi-platform company. And to that extent, we took the really big move of changing our company's, our brand's logo itself. So if you see the logo, then we are no longer Radio Mirchi by logo. Our logo is just Mirchi, because Mirchi is a strong consumer brand, and we have said that Mirchi is way bigger than radio. Today, we define ourselves as having 3 businesses. One business, of course, and the biggest business, the cash generator, the market leadership position we have, is what is called Mirchi FM radio. The second business is Mirchi Digital, and we are making huge strides. The presentation has some details about it, but I would be happy to talk about it if there are any questions. And the third business is Mirchi Live, which is our on-ground IP businesses, some of which also go on television. So the 3 businesses are now what Mirchi is into, clearly identified under a logo called Mirchi. And with that, I will open up the session for questions. I'm happy to take that. Subbu is there to answer some questions. Sufal is there, and I am there. Neerav, it's all yours.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question, you may press star and 1. First question is from the line of Dipesh Kashyap from Equirus. Please go ahead.
Yeah, thank you for taking my questions. Sir, the royalty rates that you pay to the music labels is up for negotiation, right? So the music labels have been talking about increasing the rates to 10%. So if you can highlight where the talks are and when it should be closed.
Well, I can only tell you about that the talks are on, and the IPAB, which is the new body which looks after these matters, has been hearing matters since day before yesterday, since Tuesday, and IPAB has decided to hear the matter continuously without break, no adjournments for 15 days, and announce a verdict by the end of this month. We are extremely confident of getting a better rate than the 2% that the 2010 order had shown us. And the reasoning that we have offered is very simple. And the reasoning is that after the 2% order came, there's been a huge growth in music OTTs. And the music labels need to focus on the music OTTs. And FM radio needs to be given an even lesser royalty rate simply because the music OTTs eventually will put pressure on FM radio. So we have taken the tack and we are getting a good hearing. The first 3 days have happened. That was radio's turn to speak. We've got senior counsel representing the industry, and I'm confident that we will get a good order.
Okay, sure. And so secondly, sir, our net cash position is also pretty strong. So are we thinking anything on the buyback dividends to reward the shareholders, just like our competitor has announced?
Subbu?
Okay. So this question came up in our AGM, which we had last month, and we said we will come back after discussing with our board by the end of this financial year.
So end of this financial year. Okay.
Yeah.
Thank you, sir. Yeah.
Thank you very much. A request to all the participants, please restrict to 2 questions per participant. Next question is from the line of Manish Gandhi, an individual investor. Please go ahead.
Yeah, hi Prashant, hi Subbu. Congratulations on 6 crore revenue for digital. And so my questions are on digital. After the pandemic, rising importance of digital in everyday life, and what kind of shift you are witnessing in advertisers' mindset for our solution business, and to capture this increase in huge advancement of shifting digital, what are the distinct changes we are making within our organization?
Okay. Thank you, Manish, for the question, and it's always a pleasure to talk to you. You're very right that the pandemic has given a big boost to the whole digital space. And because we've been doing this business for many years, we've seen that happening to us as well. Sequentially, like I mentioned to you, our digital business is up 67%. Now, let me explain what makes up our digital business. And in our digital business, there are several products, but there are 3 or 4 products which I think are very critical for investors to know. One of them is basically the whole digital solutions business that we are, I think, becoming experts in, and where we face very limited competition. So let me give an example. So there's a company called GSK, as you know, and GSK wanted to address their media dark markets in, let's say, UP or Bihar, and, they don't get television coverage, adequate television coverage, etc., etc. So using the plain old telephone system, we developed a solution where we made content we created a character, Jasus Arjun. We created content around the character. We built stories. We involved common people from the villages and the smaller towns of these 2 states. We made content in audio format. We made content in video format. We put it out on the plain old telephone system. We put it out on YouTube. And basically, we drove engagement and reach across the whole market. Now, this is a classic. So we combine our knowledge of telecom, because remember 15 years back, we started something called Mirchi Mobile, where you could listen to the radio of one city and another city. So we have learned the telecom background from there. We are good at creating content. We've got good local celebrities. We've got a programming team of 350 people which can create great content. So we have been leveraging that. So digital solutions is one product that we see really, really growing very rapidly. The second product is our entire YouTube related businesses. And today our 12 channels have got 11 million subscribers. Now, this is a huge number, and we should pause and think about it. Because the number one independent Bollywood channel in the country is Filmy Mirchi. And today when we go to movies, they are very excited about promoting their movies on our digital footprint. And there is a lot of money that movies spend on marketing. It's very tightly spent within 2 weeks or 4 weeks. And there are very few players who can actually compete by offering a combination of radio and digital. So I think they are very well placed over there. And then there is the whole space about original content that we are becoming good at. I won't say we are very good, but we are becoming good at. And essentially, we will become very good in vernacular content. And we are focusing on low length content, so 10-minute episodes, 15-minute episodes, etc. So digital, Manish, to answer your question, and then there are other products as well. But to answer your question, digital is an area that we are growing very rapidly in. Now, you asked a question about organizational support, and we have been beefing up the strength behind the digital team and the solutions team. The solution team is the engine which provides the ideas to go out and sell. So today we have rebranded the solutions team as the brewery team because they brew up great solutions, and we have beefed up the digital team. And we have a new head who looks after the whole digital business. We have divided the digital team into three clear verticals. There's a platform vertical, there's a revenue vertical, there's a products vertical, and there's a content vertical. So there are these clear identified verticals. We have made senior level people now run these businesses. There's a lot of focus on both solutions and digital as far as the organizational structure is concerned. In the future, I see these two businesses being strengthened in terms of human resources. And I feel that our revenue growth and jump will really come from our solutions and digital businesses.
Thanks for the detailed answer. So my second question is somewhat related to what you explained. So with our huge existing followers in digital, are we planning to launch many more products in regional language as well, something in line of like Scribbled or Michi Indies, to monetize and capture the rising trend?
So, Manish, there are two things that we're doing. One is that we are consolidating our digital businesses behind certain products which have shown a lot of revenue potential. I mentioned to you the movie promotion business is a huge potential. Original content is a huge potential. Digital solutions is a huge potential. So one is a consolidation of efforts, putting senior management, HR resources, putting marketing resources, putting sales resources behind these businesses. But two, remember that digital is a fast growing area and there are new frontiers being opened every day. So we are exploring all of them with the clear intent that, when anything takes off, we should be having a foot in the door. An example is podcast. Now, in the presentation, we have mentioned that we, got Sanofi to sponsor a podcast series. But there is humongous amount of opportunity in the podcast business. But it is very different from what conventionally people think of, It may not be B2C podcast alone. It may be B2B podcast, for instance. And there's a lot. So yes, we will explore podcasts as well. We will explore all types of other content that is possible in digital. We are also tying up a deal with Google and hopefully in future with Facebook, where we will be selling their inventory to the long chain of advertisers that we have a control on. So yes, so there are many new products that we are launching in digital, but we will also consolidate the main 3 or 4 big products that we already have.
Right. Great to hear. So, I have one more question on digital. Should I go on or I think,
Manish, you should come back later or we can chat separately.
I'll come back later.
Okay.
Thank you.
Thank you, Manish.
Thank you very much. Next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Good afternoon, sir, and thanks for taking my question. First question on the early signs of revival, which we talked about in October and November. Can you give some more flavor? Where are we in terms of October and November this year versus last year? That would be helpful.
Yes. So this year Diwali is in November, as you know, 14th November. Last year Diwali was, I think, 25th October. So remember, in the media business, we always look at October plus November combined because in different years, Diwali is set, okay? So if I were to look at October plus November and if I were to add a December in as well for good effect, so I talk about Q3, then I would expect that the revenue degrowth, which was 59% for us in Q2, should come down very strongly in Q3. It should probably half or it should become less than half of this number. Maybe there will still be degrowth because there is still a high base of last year. But I would imagine that the revenue degrowth will probably come to 25% or 30% or thereabout. I'm not giving you a guidance, but I'm just telling you the early signs. And in Q4, I would expect that unless things go really bad in this country and another wave comes, and I think the country has now learned that even if the waves come, lockdowns are not to be done. Look at Delhi. Delhi has got 7,000 cases, 6,800 cases yesterday, but nobody is talking about any lockdowns in Delhi. So if as long as the COVID is under control and the government does not think of lockdowns, I think in the fourth quarter either the revenues will come back to last year's level or just maybe shy of last year's level. So I think that there's a continuous improvement quarter by quarter.
Okay. Just one observation. Has the IPL timing change has incrementally hurt us in terms of Q3, and that's why it's slightly the revival is slightly lower than what we are expecting?
No, the revival is not lower than what we are expecting, number one. And number two, remember, radio is a very small medium. At best, it takes 5% of a client's spend, right? So it's not the one that is affected by IPL. But what IPL has done is that it has affected the business of GECs and other categories of television companies. Possibly of print, I'm not sure. But radio is an incremental medium. Radio is always combined along with other things. So radio has not been affected by IPL.
No, I was just looking at the decline. You said that internet companies have moved to the IPL, and we have talked about decline in auto, whereas if we see the sales in auto are now reaching more than pre-COVID level. They have started to grow. So the underlying growth for the customer has come back, but I think there is aversion in terms of spending on the advertisement. Is that what you're sensing?
No. So, of course, there is aversion in terms of consumer spends. There's no doubt about it. And we know that the auto sales is mostly prime right now, and actual RTO registrations are still quite some distance away from last year levels. But there is a revival happening all the same. But no, I don't think that that's really a big thing which is affecting us. I think, remember, again, October plus November is what we should look at. So when I said that the auto sector is down for radio in quarter two, I think that's simply because of the shift of Diwali. And related to Diwali, spending starts 45 days before. So a lot of the September spend has gone to October, etc., etc. But I think that auto will be a good sector for radio to concentrate on. And just for your information, the sports business is up by 15% in terms of overall number is what I'm told, the GEC business, the television business.
Correct. Just what's your sense on the government spending? What are we discussing with them? Because that last year declined sharply and it still continues to decline. So do you see
Sandesh,
this stabilizing?
Yes, Sandesh, I think that the government is still not spending. Government sector revenues volumes were down, I think 27% or thereabouts in this quarter compared to last year. Remember, last year was already a very steep fall. So government is not spending, and obviously I think government has not spending because their own earnings have been impacted. But I think we'll have to wait and see how that sector goes.
Okay, that's quite helpful, and best wishes for coming quarter.
Thank you, Sandesh.
Thanks, sir.
Thank you very much. Ladies and gentlemen, anyone who wishes to ask a question, you may press star and one. Next participant is Jinesh Joshi from Prabhudas Lilladher. Please go ahead.
Thanks for the opportunity. Sir, if I remember correctly, I mean, in the last call you highlighted that in order to be EBITDA break-even, revenues have to be in the range of 280 to 310 crores for FY21. Now, if I look at our performance in 1H of FY21, we are closer to 84 crores, which essentially means that the run rate for second half has to be in the range of 100 crores per quarter to meet the lower end of the guidance of 280 crores. So do you think that this kind of number is achievable in this environment?
Well,
Q3 is the... Subbu, yes, go ahead.
Yeah. So, Jinesh, if your question is whether we will achieve an EBITDA break-even in the current financial year, I think we continue to be very optimistic on that. We think we will be able to completely wipe out our EBITDA losses that we have incurred in the first half. On the cost-saving side, I think we had mentioned earlier call that we are looking at a cost saving of over 80 crores on other overheads. If you look at our numbers, we are at about 39 crores in the first half. And with the plans that we have already put in place, we think we will get to that number of 80. And finally, given the improving margins in our non-FCT business, which we have presented in our investor handout, we remain confident that we should be better than an EBITDA break-even for the full financial year.
And Jinesh, let me just add to what Subbu said. Remember, for the whole media industry, Q3 is a very important quarter that you are already aware about. But also, please go back and look at historically ENIL revenues. ENIL revenues peak in Q4 because there's a whole lot of solutions businesses we roll out in Q4. And I'm very confident that a lot of those television-related businesses, for instance, and on-ground related businesses will come back in Q4. So yes, that is in addition to what Subbu said.
Okay. And sir, secondly, can you talk a bit about this original content creation series named Backstage Boys, which you have kind of highlighted in the presentation? So for original content creation, what are the funds that we have earmarked? How does the monetization happen? We have licensed this series to MX Player, but are we open to licensing our content to someone who's outside of the group? I mean, what are your thoughts on this?
Oh, original content is a very simple idea. Like I keep saying, we have 350 creative people in this company. Nowhere else, I can't think of any other media house, whether it's print companies or whether it's television companies, internet companies, which have 350 creative people on its own payroll. I don't think that is there anywhere in the country. So let's put it like that we have a large collection of creative people. These creative people have been unfortunately expressing themselves using only the audio format. We are now saying, hey, open up, you can express yourself in whichever way. But here is the second thing, that just as there are 350 creative people on the roads today, there are at least 350 creative people on the outside who have worked in Mirchi and who retain strong relationship with Mirchi. So the whole ecosystem is available for us to tap. Now, what is the logic on the original content business? Now, vernacular content is very difficult to produce because there just aren't enough players who are able to, production houses which are able to make vernacular content. Backstage Boys that you talk about is a Punjabi web series. And the Punjabi digital ecosystem is phenomenal, whether it is music, whether it is original content. It's a phenomenal language to be in. And this is just the effort of our Chandigarh team and our Delhi team which put together the content. Likewise, we have content happening in Tamil, in Telugu, in Marathi in a big way, in Gujarati in a big way. We are getting into Bhojpuri, Punjabi we are stepping up on, and there are many other languages that we are. Malayalam is already starting to do it. Bengali, we are very big in Bengali. So these are all areas where there is a lot of demand and we are doing that thing. Now, just two more things. One is that not only are we good in content, we also own a lot of media. Remember I mentioned to you that we have 12 YouTube channels which have 11 million subscribers. Well, these are all channels in multiple languages. So we can make content, and on behalf of the client, if there's an advertiser, we can even release it on our media. So that's a big, big advantage. But specifically to your question about whether we are willing to license it, yes. Last year we sold 10 shows to MX Player. And we are already talking to other platforms. We are not limited to MX Player. We're talking to every single platform. Some of them require us to do longer format. We will look at doing longer format. Some of them require us to pass on the IP to them. We are looking at that as well, but for a higher margin. So there are various models being considered in the original content business.
So typically, what is the markup in this business?
Well, I can't give you specific commercials for obvious reasons, but let's put it like that the markups are predictable and they are very encouraging. And we have an advantage because our production costs are very limited, because wherever it is possible, we use Mirchi in-house talent or Mirchi alumni. And that really gives us a cost advantage. That's how we're able to keep the margins high. But for the platform which is buying, it still comes very economically for them.
Sir, one last question. I just want the capacity utilization of legacy batch 1 and batch 2 stations.
Yes, Sufal? Sufal, are you there or should I give the number?
Yeah.
Yeah, Sufal is giving. Okay. Sufal, can I just give it?
Yeah, Prashant. I'm just
okay. Top 8 markets, our capacity utilization
51%.
Was only 43%. In the remaining 27 legacy markets, it was 50%. In batch 1, like-to-like basis stations, it was 41%, and batch 2, just 13%. I think I'm ballpark right, Sufal?
Yeah, that's right, Prashant.
Okay, great.
So,
Thank you so much.
Also, the overall was 32%.
Sorry, sir, 32%? The last
Overall, that is for all the network. Prashant gave you vintage-wise and batch-wise. The overall number is 32%.
For the full network, it is 32%.
Thank you very much. Ladies and gentlemen, anyone who wishes to ask a question, you may press star and 1. Next question is from Manish Gandhi, an individual investor. Please go ahead.
Yeah, thanks for the opportunity again.
Yes,
So, Prashant, can you please share your thoughts on content marketplace, like paper content or a platform like, say, Buy Me a Coffee or Patreon? So how is our competitive strength vis-a-vis them? And in future, why can't we think about something like this with more than 11 million YouTube followers?
So, Manish, I mentioned in the reorganization that we've done that there is a special focus on a team called platforms, right? Now, the concept of this is basically that there are several platforms available across the country. We don't need to focus only on certain OTTs that are there, but there are, to give an example, Ola is a platform because inside their cabs you can stream content, right? Or airlines offer opportunity to play content. That's a platform as well. Flipkart offers you an option. Swiggy offers you an option. There are all types of content platforms which are available which to carry the content that we make. So the platform team is exactly looking at all the platforms and trying to build an unfair advantage for our own company and our own content that we produce. So that is certainly on the table. In terms of competitive advantages, we have to be very clear, Manish, that we do not wrongly look at ourselves in the market. We are not in the space of any of the television companies or any of the Amazon. We are not in that space. But remember that there is a huge, the biggest struggle on the online medium, and I'm going away from the Netflix, Hotstars, etc., because those are largely, content which is viewed over a long period of time, and a lot of people watch it on television, and many of them are subscription based and all of those kind of things. But remember, the big struggle on digital content consumption is the length of time people have available. So on YouTube, the struggle is to get people to watch even 4 minutes of content, because there is so much content and there's so much temptation and there's so much notifications which keep coming, and there's so much distraction that people, and there's so much of demanding nature of people that they find the content slows down and they switch. So getting good small format content is a big opportunity, and in vernacular language, that's an even bigger opportunity. That's the focus area of Mirchi's original content team. Now, in addition to that, remember, we don't want to sell original content as just original content. I mean, that is, of course, one option that we send it to platforms. But when we go to advertisers, what we tell them is that, hey, make yourself present on the content that we will make, which is a short format content, but use the larger solution package that we are offering you. So we will create a package for you, which will include some on-ground, which will include some radio, which will include some social media reach and marketing that we will do for you. These trends will make a larger multimedia solution with original content in the middle of that solution. Nobody can match this. This is the place where we are competitively very strong in the kind of original content and the kind of solution that we make. This space nobody does. In original content, most players are just content producers. But this combination of content and providing a solution is very, 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 very thinly populated, and we are very big in that. We are going to become very big in that.
Right. And it is very heartening to see the results of, you have been writing in annual report also about digital, and you've been talking since last 1-2 years. So it's very heartening to see the things plan out. And just lastly, one observation. So it seems if everything goes right, as you have mentioned in interview also, so we can make, 60-65 crore of second half EBITDA, and which because of no tax liability, our cash flow also matching that. So we are staring at a 300 crore cash in the March. And what anybody would have thought in this May, when you declared the March 20 result, including the we might have been thinking of how much less we will be having than 220 crore of cash. So I just wondering what is the reaction of the board, and it's a sudden change for everyone, right?
Subbu.
So Manish, if you are talking about dividend, I said earlier in the call and also at the AGM that this is something on which we will come back after the board takes up the matter later this year.
I agree. Sorry.
And Manish, let me just add to what Subbu said. So, one is that, there's a huge focus in this company on cash management. And Subbu's team has done an outstanding job of collections, of negotiating with vendors, of, managing receivables and payables. And I think this cash position is a sum total of all of that, in addition to the operations performance, which will, in H2 will obviously recover. So It's a combination of those.
Right. No, I was just wondering how the body language. I understand you have explained in last call also, in this call also, that the board will revisit in March. So I'm not asking for this quarter, but how the body language change and things, the perspective change about everything, So that was just my thing. Thank you so much.
Okay, good.
Thank you very much. Next question is from the line of Chetan Thakkar from ASK Investment Managers. Please go ahead.
Hello. Good afternoon, sir.
Good afternoon, Chetan.
On the change in the article of association that is being proposed, just wanted to know what is that?
So, those are very procedure. Can you hear me?
Yeah, I can hear you.
Yeah. So those are more procedural changes because, we had not amended the articles of association to bring it line with the amendments to the Companies Act. There is no major change otherwise. Like, for instance, all the limits that are mentioned there are the old limits. For instance, on sitting fees, it's about 20,000 rupees and stuff like that. So it is basically an amendment to bring it in line with the new Companies Act. That's it.
Okay. Thank you.
Thank you, Chetan.
Thank you very much. Next participant is Gaurav Sood from Kanaf Capital Advisors. Please go ahead.
Thank you for the opportunity. It was good to hear about how you're planning to take your digital business forward. So one question was around how are you differentiating yourself from the other competitors, and whether your business you feel has an edge in terms of providing the overall solution to your clients?
Gaurav, every company's strategy is tailor-made for itself, keeping its own strengths, its own assets, its own ambitions in mind. So in the case of Mirchi as well, our digital strategy is created clearly with that, which is why we are very happy to talk about it in the public because it's not a strategy which can be cloned by anybody else. Simply because look at the other radio stations. The other radio companies don't have the kind of digital assets that we have. They've not put 50 people in the digital team. They don't have 10 years of experience. They don't have a solutions mindset, So it's not something that any other company can copy. Our competitors in the digital business come from different areas. But to give an example, on the original content side, of course, you know that there are many players who are there in the market. None of them is a radio company. When it comes to digital solutions, sometimes you face an in-mobile or, those kind of players in the market. But very rarely will you find a radio company. And most radio companies will do simple stuff. They'll say, okay, I'll do radio and I'll shoot a video with my RJ. That's very low-level kind of digital solution. But what we do is far more evolved. So we don't face any competition over there. The real challenge in the digital business is about basically creating bespoke solutions for clients and executing those solutions, because sometimes what we do is execution heavy, and we are now focusing on basically making sure that we are able to churn out ideas faster, execute faster. We are focusing on improving our execution capabilities. So those are the things which will decide how far we are able to take the digital business, not the competitive landscape.
Okay. So Sir, you also talked about the fact that you are in that lawsuit that is happening in the court. The industry talked about the fact that there is serious competition from the OTT business. So, how are you guys positioning? What is the competition that you see, and would you see this part of the mind share being taken over, or the listening time being taken over by OTT over time with radio?
See, it's not a litigation that is going on. It's a process in the statute which says that if you cannot agree on the rates with the music owners, then there is a mechanism called the IPAB which will hear both sides of the argument and will talk about it. So it's just that, and there are global benchmarks on. See, there are a lot of things which, like radio promotes music consumption, discovery of music. These are things that the music industry also acknowledges. So basically, keeping all of these things in mind is what the IPAB is called. We cannot even think about what the IPAB is thinking about at this point in time. So we just have to bide our time. I don't want to talk too much more about it because the matter is actually being heard as we speak.
So you expect a decision by the end of this month on this?
That's what the IPAB has told us, yes.
Okay. So, the other part of the question was in terms of the competition you're facing from the OTT platforms. Are they taking away a part of the overall viewers' listening time? What are the early trends that you see on that?
Well, I think the listenership habits are evolving. So certainly music OTTs have started chipping away at the listenership that FM radio companies face. And mostly that happens at, let's say, home or, on certain types of phone devices which don't come with FM tuners. So it happens at that level. But music OTTs have also expanded the market to a large extent. FM radio companies, on the other hand, also have their own strengths, and therefore they are, the listenership is getting refocused. Overall, is there pressure on the growth of FM radio? Yes, there certainly is pressure on the growth of FM listenership. But there are strengths that both music OTTs and FM radio have.
Okay. Sir, just a comment again, other people have referred to it, is around the fact that given that one of your listed competitors has announced a payout to minority shareholder and has an impact currently with their revenues and overall business being smaller than you. Their market cap now exceeds your company's market cap. So I would just request that you seriously consider about doing something about the cash on your balance sheet and doing some payouts over time.
So, Subbu, before you respond, I know you want to respond. I just want to make a small comment over here, Gaurav, that the different companies have different ambitions. And like I said, we have a huge growth ambition. And therefore, it may take a little time for the story to evolve fully. But there's a huge growth ambition, and when the story comes out and in a bigger way is when we will. That's what we are focused on. Subbu, anything you want to add?
Yeah, I just want to reiterate what I said earlier in the call, and also what Prashant also mentioned at the beginning, which is that we will look into it and come back by the end of the year. At the moment, we are focused on improving our profitability, improving operational effectiveness, and getting our strategy aligned for the new evolving situation. We certainly come back on this particular matter.
Thank you very much.
Okay, thank you, Gaurav.
Next question is from the line of Yogesh Karve from BNK Securities. Please go ahead.
Yeah, hi. Thanks a lot for the opportunity. So I had one question. So Prashant, you obviously alluded to that in various responses, but more specifically, so it's a solution business revenue. Why should decline from 1Q to 2Q? Because by all counts, the restrictions and the overall environment was much better in 2Q.
No. So Wait. Let me just clarify to you. The solutions business has grown sequentially. I mentioned to you it has grown by 31% sequentially. Digital has grown by 67% sequentially. It is simply because I think in the first quarter there was a lot of revenue that had come from international, which was from a previous period because of that. Sufal, can you just give the solutions business growth taking that out?
So, Yogesh, as Sufal gives you that number. We had a brand licensing deal with an international partner. That revenue, and we also, that contract got terminated in the first quarter of the financial year, right? So that number was approximately about 11 odd crores, which was there in the first quarter. That number is not there in the current financial year. And that is, in a brand licensing deal, typically revenue is equal to profits because there are no costs associated with it. And that was not there in the current year. That's why if you look at sequentially for the solutions business, in aggregate terms, it would be lower. But if you take off that one-off effect, we had also, by the way, highlighted that particular item in our first quarter disclosure. So what Prashant is saying that if you take that out, then there is then the strong growth in our.
Yeah, sequentially, media solution is up by 34%, excluding this one-time revenue signals.
Yeah, sure. So thanks a lot. So that clarifies. Secondly, Prashant, you referred to certain outlook on the revenues for the third quarter and fourth quarter. So if I get it right, that is for the entire business, right, and not just for radio?
Yes, I would say that is for the entire media and entertainment business, and also for the entire business of ENIL, and also specifically within that for the radio business and each component of it.
Okay. So obviously we have sort of taken a lot of cost measures. So if what you said comes true in terms of our revenues go back to last year's level in the fourth quarter, then what kind of margins are we looking at? So considering all the cost measures that we have taken.
Subbu, go for it.
Sorry, Yogesh, I missed your question. Can you repeat it, please?
So, if, as indicated, if our revenues go back to the last year's level in the fourth quarter, so what sort of an EBITDA margins we are looking at, considering that we have taken a lot of cost measures and some of which seems to be structural and sustainable?
So, as we said earlier in the call, we expect certainly a positive EBITDA in the second half, right? And also, as I said earlier in the call, our expectation is that we will save our we will have a saving of approximately 80 odd crores in our fixed overheads, right? So that was about 39 crores in the first half, and we expect more than that to happen in the second year. On the EBITDA margin, it will depend upon the revenue mix, and that's the number that we would want to sort of give you after we also see the third quarter numbers.
Sure, sir. So that's all from me. Thanks for the responses and wish you all the best.
Thank you, Yogesh. Neerav, can we have one last question, please? Because we have to wind up today at 5 o'clock.
Thank you. Anyone who wishes to ask a question, you may press star and one. Ladies and gentlemen, anyone who wishes to ask a question, you may press star and one.
Okay, good. Neerav, if there aren't any more questions, then can we call this off?
Sure, so we don't have any more questions in the queue. Would you like to make any closing remarks?
Yes, no, nothing really, but thank you very much for your time, ladies and gentlemen. And if there are any more questions, there are email IDs mentioned at the end of the presentation. Please do contact them and we'll be happy to answer them individually. Thank you very much.
Thank you.
Thank you very much. On behalf of Entertainment Network India Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.